All right, welcome back to the Know Your Numbers podcast. This is your host, Chris McCormack, founder and CEO of Better Books Accounting, where it is our goal to equip you, the real estate investor, with the information you need to eliminate the frustrations and build confidence in your tax strategy, your accounting procedures, and everything you need to keep more money in your account and less in the IRS's bank account. If you are joining us for the first time, we have been going back through our latest ebook, The 6 Keys to Increasing Your Real Estate Revenue. We know that this is a time of high stress for a lot of people. There are questions about the market, and there are increasing costs, both on the material side, the interest side. You're forced to increase rents. It's harder to get more qualified tenants. And for that reason, we are looking to our strategies around our numbers to increase revenue and profitability wherever we can. In the past 4 episodes, we've gone through the first 4 keys, which revolve around cleaning up your financial records, keeping a process and a system so that you can maintain those financial records on a regular basis, implementing a tax plan, and using those up-to-date records to predict and project out your performance in the future. And today we're going to be jumping into the second to last key, which is key number 5. And it revolves around professional advice that you can reach out to a professional so that you can gain confidence and reduce your audit risk. We know that audit risk is extremely high when you're not equipped with the right team. And by audit risk, I don't mean the risk of being audited. The risk of being audited is often standard throughout. I mean, some people increase their audit risk by just doing some crazy strategies, quote unquote strategies. They don't amount to anything. They're really just unethical practices in ways that you are looking to avoid paying taxes. So that's one way to audit or increase your audit risk. But when I say audit risk in this situation, it means the risk of losing an audit. Because if you are engaging in business, if you're engaging in the practice of investing in real estate, you do have a risk of being audited, right? The IRS wants as much money as they can get. And one way that they increase the amount of money that they get is by auditing certain people. And they know that real estate is an attractive industry for a lot of people because of the perceived tax benefits, right? Everybody has read, especially if you're listening to this podcast, there's a high chance that you've read a book like Rich Dad, Poor Dad, a book like those that are sold on the Bigger Pockets website. These books outline the benefit of investing in real estate, and they don't shy away from saying that there are tax benefits to investing in real estate. And we know that. We've covered a lot of the tax benefits. We'll continue to cover a lot of the tax benefits. But one thing that you don't get from reading a book is the fact that some of these tax benefits are not open to just anybody, right? Things like real estate professional status. You can't be working a full-time job and get real estate professional status. And what that means is that limits the amount of tax benefit that you can receive as a real estate investor. And so when the IRS knows that a lot of people are getting into the real estate industry because of the perceived tax benefit, and they also know that a lot of these people don't have the required knowledge to do things correctly, what I mean by that is that the IRS knows that because a lot of these real estate investors that are getting in because of the tax benefits, but they don't have the right team in place to take full advantage of those tax benefits, the likelihood of them doing something wrong and underreporting their taxable liability is higher. And so they're going to go after these people and hopefully get some more money in their account. And so it's our job as your professional, if you've hired us or if you're listening to this, I mean, this is by no means qualified tax advice for your situation, but we will do what we can to equip you with knowledge. And part of that knowledge that we want to equip you with is that by investing in professional advice and teaming up with a qualified professional, a certified tax planner, somebody who has experience in your industry, you are reducing your audit risk, the risk of losing an audit, right? Think about the way that you take care of your car. We regularly get oil changes. We do this on a regular basis. I think it's like every 5,000 miles, right? And you do this not so that you can celebrate that you have new oil in your car. You do it to maintain the ability of your car to keep running. And it's the same way with investing in tax planning and investing in the maintenance package that you'll get with a professional. You invest in it because not only will they give you the strategies, but they will help you maintain those strategies so that you're not left out to dry and your car is not broken down. Your metaphorical car in this case is your real estate business, right? If you go to somebody and they give you some strategy and then you don't talk to them for the rest of your life, and then 5 years down the road, you are still using this strategy, which was a bogus strategy or wasn't all of the strategy that you needed to pay as little in tax as possible, well, now you're out to dry. And now you have to face the IRS yourself. You have to pay not only the taxes that you missed out on, but you have to pay the interest that you would have owed because you have 5 years of unpaid taxes. And you have to pay the penalties on underreporting your liability and not paying the full amount of your tax liability. And then you have to pay for representation if you decide to take this to court because you want to save every buck that you can. So the cost of not investing in professional advice is oftentimes much more costly than investing in somebody who's going to be in your corner, who's going to help you reduce your audit risk. Again, audit risk is not just the risk of receiving an audit notice in the mail. It is the risk of losing an audit and being on the hook for unpaid taxes, for interest, for penalties, for representation. And so professional advice will help you reduce the audit risk. So you say, how are some ways that you can lose an audit? Well, part of it is just not having the right advice, not having all of the information, right? You can go on certain social media pages, and we post on Instagram, we post on YouTube. You might even be watching this on YouTube, and I'm all for social media. I think it's a great way to increase the knowledge of the general population. And when more people have knowledge, then they're equipped and more confident in their decision making. But if you have the wrong knowledge or incomplete knowledge, well, you only have half the puzzle. And with incomplete knowledge, you will not get very far, right? So say you get a tidbit from our Instagram and it says, hire your children. And so you take that advice and you hire your children. You pay them $14,000, knowing that the standard deduction is $14,600, and you do nothing more than that. You don't have a contract, you don't do W-2s, you don't pay payroll taxes. You just give them $14,000. You take some of that, invest it in a Roth IRA, take some more of that, and give it to them to go and spend or invest or do whatever they want with it. And the IRS comes knocking. They knock and you receive the notice saying that you're under audit. They're looking at all of your records. So not just paying your children, but also everything else you've been doing. So whether you're writing off things that don't deserve to be written off or whether you're underreporting income, they're going to look at it all. And they find this payment to your 10-year-old child. And remember, maybe you don't remember, I don't know if I've said this, but there are cases where the IRS has allowed 7-year-olds to receive payments from their parents' company. So your child's 10 years old, they've been doing some sort of work. You think you're in the clear, right? Well, you're wrong. You paid them just a lump sum of $14,000. You didn't have any sort of documentation in the form of a contract or a W-2 or a number of hours worked or a set wage for what they're doing. And the IRS wants their money. So you got a $14,000 deduction and they take that away. Your income is now $14,000 more than it was. You owe taxes on that $14,000. You owe penalties on that $14. You owe interest on that $14,000. And if you're bold enough to take them to court, you owe somebody a representation fee. So all of a sudden, the money saved from taking someone's advice, maybe it's even our advice off of Instagram, and implementing it without getting the whole picture or without getting one-on-one advice, you are now out of luck and on the hook for taxes on $14,000, interest on $14,000, penalties on $14,000, and a whole lot of headaches because the audits also take a lot of time. And one of the biggest complaints that people have that have gone through the tumultuous experience of an audit is that it took a lot of time, it was stressful, they lose sleep, and if they're fortunate enough for that to be the only cost, even that alone is enough. But most people, especially in a situation like this where you didn't have all of the safeguards in place and they throw out your strategy and now you're paying the interest and the penalties and the taxes, well, you're going to have a lot more than just headaches and lost sleep. You're going to have a lower bank account. You're going to have stress in your relationships. You're going to be concerned about everything else that you're doing because who knows however much else advice you've received through the power of social media, right? So I don't want to scare you, but this is a real thing. There was a recent court case about somebody who paid their child $16,000 some odd dollars and they lost the court case because they didn't have the right documentation. And so key number 5 to increasing your real estate revenue and increasing the profitability by decreasing the amount of expenses that you're taking out, primarily the tax expense. This key is investing in professional advice. I can't overemphasize this. We do this in every other market, right? We do this in our health. We invest in the professional advice of a doctor. We invest in the professional advice of a surgeon. We invest in the professional advice of a dentist. We invest in the professional advice of a physical trainer. It is time to invest in the professional advice of a tax strategist who meets your unique needs, who has the experience in your industry that he or she knows what will fly in the face of the IRS, what won't fly in the face of the IRS, what the ideal way to set up your entities is, how to operate those entities, right? Because one of the keys here is documentation. I talked about the importance of having documentation around hiring your children. But we meet a lot of investors who have these crazy entity structures where a management company in one state, a holding company in another state, an investing company in a third state, and now they just don't know what to do with them. They just have this pretty little flow chart that shows how it's supposed to operate, but they don't have anything more than that. And if you don't have more than that, you're likely missing out documentation that's going to explain the proper way of operating these entities. And if you don't have the documentation behind the proper way of operating these entities, well, it won't be long before the IRS comes knocking and they see that you're moving money in between entities and writing it off here and not including it here and doing something crazy up here. And all of a sudden, they're going to throw out every deduction that you have, or close to it, right? I might be exaggerating, but the point is that if you don't have the right advice and the right people in your corner to know that you're taking every step you need to take to ensure that you're paying as little tax as possible, but also documenting yourself properly to back it up in the case of an audit, well, then you are going to be wishing that you did. I'll say that much. You're going to be wishing that you did, because the cost of an audit is so high. And it's so avoidable if you have the right people in place. For example, reach out to us or any of the other certified tax planners around the nation. You're going to get a plan that not only shows you the strategy, but it shows you the court cases that have cleared that strategy. It shows you the requirements to make sure that you're adhering to that strategy. It shows you what you need to document, what you don't need to document, who you need to be reaching out to make sure that it's done properly, right? Think about cost segregation. A lot of you real estate investors know about cost segregation. It's a great strategy. But there are good cost segregation companies and there are not so good cost segregation companies. I had a prospect come to me asking or inquiring about cost segregation, and this software that he found online that's $100 compared to the study that's $5,000. And he's like, we can just do this. Well, guess what? The only cost segregation studies that have cleared the IRS and have made it through the court cases and audits are those that are performed by engineers, verified engineers. And so going with the cheaper alternative of the software that's for sale for $100, and you can do it in your own bedroom, compared to doing it with an engineer, the cost difference of $5,000 to $100 might seem very expensive, and it might make sense in your mind to go for the $100 one. But fast forward a year from now, when the IRS is looking at your tax return and they're like, wait, this cost seg study, what, this doesn't look right. This isn't what we see from the guys like CSSI or Madison Specs or some of these other companies that do some high quality work. Let's go get a little more information on this. And they come and knock on your door and ask you to provide everything you have for your tax returns and your cost segregation and the expenses that you've taken. And you show them the little software that you did your own cost seg study on. Well, there's a high chance that you lose that audit and you lose the $100,000 worth of deductions that cost seg gave you. And now you're paying taxes on that $100,000, which if you're in the 24% tax bracket is $24,000. IRS also says, not only do you owe those taxes, but you owe the interest and the penalties. And that $24,000 quickly goes up to $30,000. Now that $5,000 difference doesn't seem so great, does it? So listen, the fifth key to increasing your real estate revenue and just properly protecting yourself is getting professional advice, reducing the risk of a lost audit. I'm telling you, there is nothing more stressful to a US taxpayer than being audited, not having the right people in your corner, and having to make it through on your own. You do not want that. Real estate is a great industry to be in. It is a heavily regulated industry because of some of the great benefits: cost segregation, real estate professional status, repairs, improvements, appreciation. These are great benefits that we love, but we want to make sure that you're doing them properly. And you do that by teaming up with the right professionals, the right people who know the ins and outs of the tax code and can give you qualified advice to make sure that you're keeping costs low, increasing revenue, increasing profitability, and keeping more money in your account. This is the Know Your Numbers REI podcast. We're going to be wrapping up the 6 keys to increasing real estate revenue on the next episode. If you get any sort of value out of this, do us a favor, leave us a 5-star rating and review. If you know somebody who's struggling to find their way in the tax world, maybe they're doing it on their own, maybe they're trying to find the right team, but they've interviewed accountant after accountant, they've switched accountants year after year, thinking that this is going to be the year they find the right one, have them reach out to us, share this with them. Man, there are so many people out there that are struggling to find the right answers when it comes to real estate tax advice. And we know that you just need the right professionals in your corner. I trust you enjoy this message. I trust it was valuable. God bless you and keep moving forward.